All right, so for today's deep dive, we are tackling Warren Buffett, the Oracle of Omaha.
Hmm.
And our mission really is to get past the legend and extract the foundational nuggets. How one of the world's most successful investors built this monumental fortune using, well, surprisingly simple rules.
It's true. The sources we looked at emphasize that. The foundation was set so early. He was born in 1930, and he was obsessed with business from a young age.
Right, I saw that. He bought his first stock when he was just 11.
Just 11.
Hmm.
But what's fascinating is how he took that early curiosity and turned it into this incredibly structured, repeatable framework.
Exactly, because that framework wasn't about chasing every hot trend. He became a titan through value investing. But that phrase gets thrown around so much.
It really does.
How is Buffett's approach different than just, buying good companies?
Well, what makes his approach so different and what the sources really stress is the idea of intrinsic value versus the market price.
The actual underlying worth.
The actual worth. Value investing, the way Buffett does it, is a hunt for a margin of safety. You're not just looking for a strong company. You are insisting on buying its dollar of value for, say, 50 cents.
It's a ruthless focus on getting a discount,
A huge discount, yeah. And that discipline is what allowed him to transform Berkshire Hathaway.
which started out as a failing textile mill.
A completely failing New England textile mill.
Yeah.
And now it's this massive holding company that dominates huge parts of the economy.
How did that transformation actually work?
The key mechanism, and he's famous for this, is cash flow and what he calls permanent capital. He acquires businesses like the insurance giant Geico,
Right.
and those businesses provide these massive, reliable pools of cash or the float, which he can then allocate to new investments. It's a continuous compounding engine.
So that's how we get a portfolio with staples like Coca-Cola and Dairy Queen, but also a huge, more recent position in Apple.
Yeah.
That Apple buy seemed like a big departure for him.
It did, but you could also see it as an evolution. I mean, the core discipline is still there. If you connect this to the bigger picture, it all hinges on three tenets:
Okay.
patience, discipline, and simplicity.
And that leads us to maybe his most famous quote, the one that is the critical aha moment for so many. He told us to be fearful when others are greedy and greedy when others are fearful.
Exactly.
It sounds so simple, but why does that strategy actually work so powerfully?
It works because he fundamentally understands behavioral finance. When other people are greedy, asset prices get high, right? They get detached from that real intrinsic value.
You get a bubble.
You get a bubble, which is bound to pop. Then, when others are fearful, when they panic, they sell those same great assets for way below what they're worth.
So his discipline allows him to just sit back and wait for those moments.
He waits to capitalize on human error.
Yeah.
He's not just a contrarian. He trusts his own calculation of value over the crowd's momentary panic. That's where the real magic of compounding happens over decades.
And that long-term mindset, it goes way beyond just quarterly earnings. The sources make it really clear that his philanthropic work is a huge part of his legacy.
Oh, absolutely. He's pledged to give away the vast majority of his wealth.
And he co-founded the Giving Pledge with Bill Gates.
Right, to encourage other billionaires to do the same. It's really the ultimate form of capital allocation, but for societal impact, not just accumulation.
So if Buffett's strategy for building a monumental fortune is truly based on that core simplicity and that unshakable discipline, we'll leave you with this final thought. What single complex decision in your own life, career, financial, personal, whatever, could benefit most from ignoring the noise, ignoring the fearful and the greedy, and instead applying that same patient, long-term perspective? Think about what you truly value.